Hey traders, this is Blake Morrow with Trader Summit, and I have two esteemed guests with me today. I have Michael Brown. Sorry, I don't know where they're right there. They're right there. I have Michael Brown of Pepperstone, and I have Richard Matthews of One.io. Gentlemen, how are you today?
Good. Very well, Blake. I think Dick's finally managed to dry off. He got caught in the rain earlier, but apart from that, we're very well.
So you got little bit of soppiness to your attire today, right?
I have, yes. Hence the jumper.
Had mind his shirt, clearly.
Well, we have so much to talk about, and I mean, there's obviously events coming up, and we're going to have this video out, before the Fed, before the Bank of England. We could talk about non-farm payroll. I got other things I wanted to discuss really quick. We just got past the Bank of Japan, and they did the old BOJ, let's leak it to the Nikkei. I say newspaper. Are there newspapers anymore? They leaked it to the Nikkei. The Nikkei, ran a story that the BOJ is going to widen their YCC band. But did they? I mean, it seemed like they came in a little below expectations. I know I was expecting more. I think the market was expecting more. What are your thoughts here? Any thoughts?
Well, I've drawn the short straw with this one, haven't I? To try and explain
Off you go.
What is probably the most complex central banking decision over the last God knows how long. How do we do it simply? First and foremost, yield curve control is dead in the form that we knew it, in terms of having a hard upper limit on where the 10-year JGB can trade. That was previously, we're not going to let it go above 1%. Now, they are going to let it go above 1%. So that's the first thing. Yield curve control is not a thing. The second thing that I think is important, and I don't think the market has quite grasped the significance of this, is that previously the BOJ were using 0.5% on the 10-year JGB as a reference. So depending on how far above that level they were, they would come in with an unscheduled bond buying operation. They're now going to use 1% as that reference. So automatically, a reference is pretty much double where it was before. And I think so that means in practice that yields, or they are going to, you would expect, allow yields to trade a fair way north of 1% before they step in with a bond buying operation. I think the third thing, and hopefully the last thing, is that actually no one really knows how high they're going to let yields go. Only a very, very small group of people within the BOJ do. So I would expect the market to remain pretty short JGBs and try and test their metal a little bit. And the fourth thing, this is the last thing, is again, it is the BOJ doing a monetary policy action, not for any sort of policy reason in terms of we think inflation is getting towards our target, we want to start tightening things up. It is the BOJ doing a monetary policy action to allow them to ease policy for longer and for that easing to be more sustainable. So very, very complicated. There's a lot of stuff out there about it, but that's hopefully a nutshell explanation of what the hell's going on there.
Well, the thing I wanted to ask you then, since you had so much to say about the BOJ, what do you think happens with the yen from here? Because the yen, the dollar yen is well above 151. Actually, just as we are speaking, we are seeing a bit of a quite of an aggressive move lower, meaning the yen is strengthening at this very second, but we are still well above 150. So where do you see the yen continuing to weaken based on what you heard yesterday?
It's a tough one to call, but I think we've come a long way in a relatively short space of time in the yen. And I think if you start to consider what's going on, we'll get on treasuries in a bit, but I would argue, looking at an environment where a lot more people are going to start sniffing around the long end of the curve and start buying into the bond market, and an environment where you would expect JGBs to yields to move higher. So that should narrow that rate differential between the US and Japan. And you might then say we're getting near a bit of a top in dollar yen. But is that to say we can't get to 155? Absolutely not. But I think over the next 6-9 months, it's starting to look a lot more constructive.
Okay, well, I appreciate your input there. Now, I see, Richard, you're about ready to fall asleep here, listening to the BOJ.
Oh, sorry.
Yeah, I know you were literally dozing off. But let me ask you this.
No, of course.
Let's go into what we could look into tomorrow. We have the Fed. You know, I know you've been an advocate literally over the last few months about how hawkish the Fed is going to stay. Are you expecting the Fed? I know we're not expecting the Fed to raise rates, but are you expecting a hawkish outcome and really tone from the Fed chair?
Yeah, I think so. I think he's going to carry on being hawkish, higher for longer. He's not going to change that. Why should he? You know, the economy's motoring along pretty well in the States. I know we'll come on to non-farm later on during this. I can't see him changing his tone whatsoever. Okay, the 10-year is doing the heavy lifting at the moment. Yields are high. My question is, if you suddenly get a spurt of buying in the 10-year and yields in the 10-year start dropping, well, your heavy lifting is gone. What's the Fed do then? And you see an uptick in inflation. So he's not going to back away from being hawkish. Anyone who thinks that the Fed's going to cut rates before this time next year is bonkers.
Really? Oh, well, that's a bold statement. I mean, but I'm not going to disregard anything that you just said. I mean, we had the employment cost index today, came out stronger than expected. Consumer confidence, I don't know how it is, but the Conference Board consumer confidence numbers came in 2 points more than 2 points stronger than expectations. Our jobs report continues to stay really, and we'll talk about the non-farm payrolls, but they continue to be fairly robust. Michael, do you think there's any outliers for the FOMC tomorrow that we should be worried about?
Well, I was going to say, you've got to be careful. You're giving people who forecast data a bad rep with all of these beats that we get. How can we do a short FOMC preview? Take the September statement, copy it, change the date, release it tomorrow at 6 o'clock in the evening UK time. They literally don't need to do anything else. Powell's presser will be pretty much identical to what we've heard from him recently. I think we will get a recognition from Powell, firstly, that financial conditions are being taken into account in setting policy if the impact is persistent. And that latter bit is important, one, because it's what he said in New York a couple of weeks ago, but also because if the Fed came out and went, as Dick said, the bond market's done our job for us, the move in the 10 years equivalent to 50 bips of tightening, we don't need to do any more. Well, what's the market going to do? It's immediately going to go and buy the 10-year, and we're going to be 50 bips lower, and the Fed are going to do a U-turn pretty quickly. So they're not going to do that. And I think the other thing that we're not going to hear from the Fed tomorrow, and it'd be a surprise if we do, and it's one word that I'm going to be looking out for very, very closely at the press conference, and that is sufficiently. Because I can always guarantee that they will ask Powell, do you think current policy stance is sufficiently restrictive? Again, it's all about flexibility. It's all about optionality. It's all about keeping, as Dick said, that extra hike in the back pocket if they need it in December or early next year. So yes, policy is restrictive. Are the Fed prepared to go on record and say it's restrictive enough that we're confident the job is done? Not yet.
Not a hope. Is that not a hope? When did you see the first cut?
September 24.
Oh, so don't say that much.
All right. Well, he's just undercutting you, Dick. Just slightly.
I thought it was September.
No, you said it's October.
What month are we in?
The only reason I say September is not because I'm trying to undercut Dick by a month,
but not much.
But it is that. No, it's because I think when they cut, because they are going to cut eventually.
Why? Why should they cut?
Well, you're going to have to cut eventually because inflation will be back at 2%, or growth will have fallen off enough that it's necessary.
I think interest rates are going to stay a lot higher than people think for a long time.
The other thing is,
but that's by the by.
Well, I was going to say, just to finish that point, when they cut, I think they cut at a meeting with forecasts to support that cut. which would either be September or December next year. That's the only reason I'm saying.
Okay, and you just wanted to slide in just before Dick. I get it.
Yeah.
But he's wrong. That's the difference. He's wrong.
And October it is. It is October. But let me ask you guys this then. Let's start with you, Richard. What's the trade for the Fed? I mean, the dollar's gone. It's holding up very well, and I think it's really kind of scared a lot of people. A lot of people trying to get short the dollar. It's not backing away. It's holding its ground. Do you continue to buy dollars here, or is there a better trade out there for the Fed?
What do we? This comes out on Wednesday, doesn't it?
It comes out before the Fed. So this is why I'm asking.
It comes out before the Fed. Actually, I think Friday's more important than the Fed, and not because of non-farm. I just think people reverse their positions. If they go short the dollar now, they'll buy it back on Friday. I would probably be tempted to buy some 10-year bonds. I think the market's so oversold. I actually think the dollar's overbought, but really, really short term. I'd want to cover my dollar shorts by the weekend because you've still got this problem in the Middle East, and I would give anything to see it resolved by the weekend, but it's not going to be. And the odds are going to be it's going to be worse, and the odds are that it worsens over the weekend. So I'd be really, really short-term trading. I might sell some dollars, I might buy some bonds, but I'd be in and out by the weekend.
Michael, what are your thoughts?
FX is a weird one at the minute. We were chatting earlier on with using some slightly colourful language that we probably can't repeat here to describe the state of the market at the moment. But there's not a lot going on. The cable's been in a range, the euro's in a range. Everything above the yen isn't really going anywhere. I can't see any downside to being long the dollar and buying any dollar dips. The bottom of the range, if you look at the dollar index, which is massively weighted towards the euro, but I'm just being lazy here, is about 105.5. I think you've got the 50-day moving average pretty much bang on or just below that level as well. As long as we're above there, I'm happy to buy any dips that we see in the greenback.
Sounds good. Well, don't forget, this is the Trader Mother Effin' Summit. So you guys use whatever language you want to. Just kidding.
Okay.
All right. I take that back. All right, let's talk about your favorite central bank in mine, the Bank of England. And we're going to talk about the sterling, the Great British Pound sterling, the Betty. Michael, what are your thoughts with the Bank of England here?
Well, we've talked about the Bill and Ben, so let's go on to the Betty now.
Did you ask me or did you ask me?
I don't know.
I asked you, Michael. Let's go. What do you think?
We're going to say the same answer, aren't we?
Well, we are, yeah. The BOE aren't going to do anything. They're going to copy and paste their statement from the last month as well, I think.
Yeah.
Actually, I said earlier on in the week, actually, with your good mate, Ryan Littlestone, who I'm taking out to lunch tomorrow, that this is probably one of the most, and I really don't want to jinx everything now, but it's probably one of the most predictable rounds of central bank meetings that we've had in about 18 months or so. And I really am going to tempt fate here. And I think that actually for the next quarter or two, could be the time that central banks go back to being a bit boring again, because no one's really likely to do anything too significantly.
Is that because the rest of the world is so unpredictable, the geopolitical is so unpredictable, that central banks have got to be predictable?
Yeah, you've tightened so much, you can wait for that to feed through and you act as that ballast against all the chaos that's going on elsewhere. BOE, unchanged rates, policy got to be sufficiently restrictive for sufficiently long. We'll hike again if we see inflation being persistent. It'll be a 6-3 vote because the newbie on the committee, Breeden, won't dissent. And there hasn't been enough data. If you voted for a hike in September, there hasn't been enough data for you to change your mind. So, boring as hell.
So the only thing I'd dissent on is I think it would be 5-4. But it's the same.
Okay, so you think there's going to be there's another hawk in the, or another hawk in the midst somewhere?
Yeah, I think so. They may just doze off to sleep and they'll put their hand up.
They've got you a vote, have they, this time?
No, I don't.
Well, that means you're bullish sterling right now.
What? Pardon?
I didn't mean to give you a heart attack. I totally didn't mean to, but I did want to throw you off. So, Richard, what do you
back in April the 1st or something? Are we now?
What do you think is going to happen with the cable? I mean, we're sitting in this bearish wedge. Can't get above 122 any meaningful way. Do you continue to sell it? Look for a break below 120 eventually?
I do, but I actually don't think that FX is going to move very much until something happens in the Middle East. And yeah, heaven forbid I'm wrong. I just don't see that being resolved anytime soon in any satisfactory manner for anyone. And I think it just gets worse. And on that basis, I buy a safe haven. So I've got to buy the dollar. Okay. And so hence I'm short cable.
All right. Well, that sums it up. You do believe we'll eventually break below 120?
Yeah.
See what I did there?
Yes.
All right. So last question. You think we'll stick with you, Richard? Do you think that the non-farm payroll this week is going to be the event to watch? Why is that, and what are you looking for as far as the data goes?
I don't actually think it's the event to watch. I think what's happening in Israel and Gaza and Hezbollah, and why don't they all begin with H, as Michael was pointing out? But who thinks Hezbollah and Hamas? They all begin with H.
Get that in the comments if anyone knows the answer to that.
Anyone know why all of these terrorist groups begin with H? Yeah. I want to know. Right? It must be Iranian for another word. I won't say what I thought it was Iranian for earlier on. So I actually think that is by far the most important thing. After that, I think probably non-farm payrolls. What are you looking? 175, 180, something like that?
Yeah, but we had a blowout number last month. I mean, is it going to be a repeat?
I don't know. I haven't thrown a dart line.
Where's the dartboard?
You got any dice in your pocket?
Yeah. What's the auto workers strike do to the number?
Yeah, I don't know. So, but you think this jobs report is kind of up in the air and it's not going to be the most important thing. But you mentioned
that, actually.
Well, real quick, Richard, you did mention if I sold my dollars today or tomorrow post FOMC, I'm going to have to buy them back on Friday. So that does mean that you think that the data is not going to be bad.
I don't think the data is going to be bad, but actually I'd buy it back because I wouldn't want any weekend risk
of short dollars. Yeah, that makes sense. Yeah. Okay. All right. Well, what do you think, Michael? You wanted to throw something in there.
No, I was going to say, I don't think the jobs number really matters at all, in all honesty. It comes 2 days after a Fed meeting. We've got another jobs report before the December meeting anyway, that the November data will be due. In any case, I think the Fed are more concerned about getting inflation back to target than they are about 100,000 jobs here or there on a monthly basis on the payrolls number. We may get a knee-jerk move after the jobs report when it drops on Friday lunchtime here in the UK. As Dick said, I think if that knee-jerk move is higher in the dollar, that will accelerate pretty quickly as everyone tries to hedge any potential weekend risk. If we see a knee-jerk move lower in the dollar, I think that will pair pretty quickly because traders all across the globe are going to have in their minds, what positions don't I want over the weekend? And I think no one is going to want to be short a haven or short crude going into the weekend when geopolitical risk is where it is. So it's not a case of, here's the jobs numbers, what do I want to do? I think it's more, here's the jobs numbers, right, now I've got an excuse to get out of where I don't want to be. Yeah. And then if nothing happens, fingers crossed nothing does happen, you can get back into those trades on Monday morning.
Which has been the kind of the MO for the last several weeks. You see this kind of rush for safety on Friday, and then Monday it unwinds again, and then we start all over again. So really great conversations, gentlemen. I want to say thank you so much.
Wait, you haven't asked your question.
Yeah. Oh, what about oil?
You wanted to ask us about crude and you forgot.
Oh, shoot. That's right. Yeah, I did forget, and I was thinking, hey, don't go anywhere. And by the way, if you're enjoying this conversation, make sure you give these guys a thumbs up. Let's talk about crude.
We'll do the interview next time.
Thank you for reminding me. Sorry, it's a long morning
crude,
already. But crude, tell me about crude, because it has been so damn weak. I mean, here we are breaking lows, like literally breaking below lows that we saw a couple of weeks ago. As this conflict started, we're trading around 81.50 on WTI. Why is crude so weak right now? Let's get into it.
Yeah, it's an interesting one. I mean, I was waiting for the train yesterday, actually, of all things. I was sat there looking at Bloomberg and noticed that, what an exciting life I live. And noticed that, as you say, front WTI is back pretty much where it was on the 6th of October before all of this kicked off in the Middle East. I think it's the crude market going, we don't think this is going to escalate into other parts of the region, particularly into other parts of the region that produce crude oil, because Israel does not produce a lot of crude or nat gas. Question is that a valid assumption or not? I would argue probably it's a risk at this point, given, as Dick said, you've got Hezbollah getting involved, the Houthis in Yemen, Iran pulling all the strings you would expect behind the scenes. I certainly wouldn't chase crude lower at this point. And I think if you have been short crude for a while, it's probably prudent to start thinking about booking some profits. It is all based on that assumption, and the situation is so fluid and unpredictable that actually I'm going to go out on a whim here and say anyone who tells you they know what's going to happen, ignore them, because no one knows what's going to happen at this point.
Absolutely.
Yeah, great point of view. Richard, is there anything that you wanted to add to that?
Yeah, I wouldn't want to be short crude. I read a figure that there's 50 warships, battleships in the Mediterranean, which is the highest number since 1945. If you've got that concentration of military power, there's something. It'd be amazing if something doesn't happen. And I wouldn't want to be short crude. I certainly wouldn't go short into the weekend short of crude.
That makes a lot of sense. Well, thank you guys for addressing that. And it's something we talked about before we rolled the cameras, and I'm so glad that you brought it up, and we did discuss it. So thank you both for being here on the Trader Summit. Really appreciate it. What's the best way to follow both of your work? Let's start with you, Richard.
You can follow me at Dickie Matthews on Twitter and on LinkedIn on one.io, or just email me through LinkedIn or Twitter. Just contact me.
Sounds great. And Michael Brown, love our interactions over the years on Twitter, but X? What's the best way for people?
Sorry,
whatever it's called.
X, whatever it is. Yeah. But what's the best way for people to follow your work?
On Twit, X, or whatever we're calling it now, Mr. M. Brown, also on LinkedIn, Pepperstone, all over the place. And he hasn't promoted himself, but Dick's got a brilliant new weekly column that he's writing as well, and someone else might be making a cameo from time to time. So check that out as well.
Yeah, called On the Spot. I wanted to call it One Direction, and I got voted down. They said that's the worst name ever. I thought it was such a good name.
That's because we most of us have nightmares about One Direction, the band. I mean, that's exactly why. But hey, make sure that you're we'll talk about this off camera, but we'd love to be able to showcase you here on the Trader Summit and get that article out. So gentlemen, thank you so much for being with us. Appreciate you. Good luck this week, and good luck with my colleague Ryan Littlestone, and hopefully he doesn't eat you out of house and home there.
I certainly hope he doesn't. I'm sure I'll be all right. Thanks again for having us, mate.
Appreciate it. You guys have a great one.
Cheers. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.